So we are in the session number 3 of the CMA orientation. Orientation classes, as we discussed, is the foundation for the CMA course. It will help the working professionals to come back to the studies, having a hands-on experience of the basics. These classes are basic classes. Each and every chapter of CMA will be covered at a basic level, which will help to revise the course which you completed in BCom, MCom, or CA Foundation and other areas. In the previous chapter, we understand the basics of cost sheet, and we try to calculate the prime cost, factory cost, cost of production, total cost. We shared some formulas. So Alhamdulillah, all the students very actively completed the homework on the same day. And by tomorrow on Monday, you will get all my students will get an LMS logins where you can start checking the overview, the books, materials, everything will be available in the logins. You can start preparation and implementing the practice which we discussed about the success journey for CMA course. The new students who joined today, recorded section will be provided for the 2 orientation completed. Let us start. Today, our topic is ratio analysis, which is also very, very important for the management purpose. So, ratio analysis is a language of business performance. Accounts means a language of business. Accounts means a language of business. But ratio analysis is a language of business performance. When it comes to the language, when you are learning the language, you must know the meaning of each and every word. Are you able to hear me, all of you?
Yes, sir.
Yes, sir. Yes, sir. We're able to hear you. You're audible.
Yes, sir.
Very good. So, for example, I don't know English. A language which it's a medium of communication. Language means a medium of communication. For example, I don't know the English language. I don't know the English language. I am trying to learn the language. I'm trying to learn the language. So I'm going from one street one day. Everybody is crying there and dead body was there. So I asked them, Kya hua? What happened? Emaindi. So what languages we know? We asked him. Then the person said, he gone. He gone. Then I understood if someone died or someone passed away, we need to use the word gone. I learned the English. So I learned the English means I know accounts. I understood the vocabulary of accounting like balance sheet, P&L, blah, 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 these things. After a couple of days or couple of weeks, I'm going from another street. The parents are crying because their son got a big job in US. He completed a US CMA and he is flying to US CMA. Obviously, the parents will cry, especially the mother will cry. Then I asked her, what happened, madam or auntie? Why are you crying? Madam or auntie, why are you crying? Then she said, my son gone. She said, my son gone. That means I understood her son passed away or her son died, because I know the meaning gone means someone died. So I started telling the auntie, don't cry, auntie, you have to go, I have to go one day, everyone has to go. Everyone has to go. Then what she will give? She will give a big slap. She will give the big slap because that is the happiest moment she is crying. So the word is same, situation same, meaning different. Situation is different, meaning will different. So what is my intention to address this sentence is, learning the language is important, but using the proper word in the proper situation is very, very important. In our case scenario, what we discussed, gone word is giving the different situation in the different meaning. So learning the language is important and using the proper word in the proper situation is very, very important. And one more thing is, we can take one more example with the language of accounting. I'm a newly accountant. I completed my BCom. I know some vocabulary, assets, liabilities, and I know some words called insolvency, position, and bankruptcy. I know the words. I learned. I by heard it. I passed the exam. And luckily, I got the job as an accountant. So I needed 2,000 dirhams petty cash. Only 2,000 dirhams. Good company, big company. I'm working. I need only 2,000 dirhams as a petty cash. So I called to my senior accountant. He not answered my call. I'm a new job, I'm very stressful. I'm very excited. And, so directly I'm very close to the owner because I got appointed from the owner. So directly I called to the owner. I want to take impression from the owner. I want to come into the attention of the owner. So I called him and I said, boss, we need tomorrow 2,000. Otherwise, we'll go for a bankruptcy, or otherwise we will be into the insolvency position. Can we use these two words just for 2,000 dirhams?
No, sir, we cannot use.
Cannot use. But I know these two words. The owner will get heart attack and he will die. So proper words using is very, very important. So I'm not telling you the ratio analysis is a subject. Ratio analysis is a MCQs. Ratio analysis is a formula. Because you are not a BCom or a MCom student. Your responsibility not to calculate the formula and get the answer. Once you become an CMA professional, your responsibility to explain to the higher top level management. Higher top level management, how you will talk without knowing a language. So my sincere request and sincere advice to all the students is to understand subject, take every chapter as a language for CMA. So ratio analysis is a language of business performance. What are the performance statements? From the accounting, what are the performance statements? So I will ask a question to Mr. Iftikhar. Ratio analysis is before accounts or after accounts? When it will come?
After accounts, sir.
Arpita? This is very, very important.
It will be, sir, after accounts only.
Wise?
After the accounts.
Just the business performance, right? Once we complete the accounting, then only we can understand the performance of the business. Or during the accounting, like accounting cycle is the journal, ledger, trial balance, trading and profit and loss account. It will fix somewhere in between the steps, or it will come after balance sheet.
So depending on the ratio that we are willing to find, it can sometimes happen after ledger preparation or during the after the P&L preparation, and then sometimes after balance sheet preparation also.
So we can say that it will go parallel, not
Yes, sir.
simultaneously, not behind, not after. Right. So the statement which we given after accounts is wrong. Let us jump onto the language of business performance. This is only possible if you know how to prepare a proper balance sheet and the P&L. This is purely speaking with the figures. Speaking with the figures. If figure is wrong, you will get a wrong information. You will provide a wrong information. So let us understand the today's topics. Is introduction to ratio analysis, advantages of ratio analysis, limitations of ratio analysis. This is very, very important. What is ratio analysis? What are the advantages, limitations? If you know these things, you can enjoy the syllabus. You can enjoy the chapter. And in the previous session, we discussed the limitations of financial accounting, limitations of cost accounting, limitations of financial costing, cost accountants. Same like every chapter is there having its own importance, as well as every chapter is having their own limitations. And we will understand the classification of the ratio analysis based upon which sectors we classified: traditional classification, functional classification, importance of the ratios, limitations, and the point of time in the relation to the ratios and usage of the ratios, and all other chapters, the ratios we will understand. Okay. And today we'll understand the introduction to ratio analysis. Today we are going to understand one of the most important concept in the management accounting and the financial analysis, which is very important in management accounting and financial analysis. This is very important and high scoring chapter in the CMA. Ratio analysis. In CMA, ratio analysis helps the management. Each chapter will help to the accountants? No. Why it is important in UAE? Very, very important in UAE. Okay. Not only UAE, everywhere where they have the loans with the banks. So ratio analysis helps the management, and ratio analysis will help to investors, and ratio analysis will help to the banks, and ratio analysis chapter will help in decision making and evaluation. This is very, very important. This chapter is useful to the management and the investors. How this chapter is helping in evaluating, this chapter is helping in decision making for the profitability, liquidity, efficiency, solvency, and the business performance. The beautiful words and very, very important words for your personal life also. The liquidity and the solvency and the efficiency. So what we are trying to understand in this chapter, profitability, liquidity, efficiency, solvency, and business performance means we know that after calculating the ratios, what we are trying to understand and what decisions we are going to take. So, as a CMA professionals, should not only prepare the financial statement. So, as an accountant, you know how to prepare the balance sheet. So, as a CMA student, you are not only preparing the financial statements, but also interpret what the numbers actually means. For example, one question I will ask here, the balance sheet must tally. Assets must be equals to liabilities. Right, Mr. Iftikhar?
Right, sir.
So I'm trying to understand, and we know that balance sheet we are preparing to understand the financial statements of the company. So what financial comments I'm giving, I'm an accountant. Okay. So assets are more than the liabilities. Assets are higher than the liabilities, then the financial position of the company is very good. Right or wrong, sir?
Generally, it's right, sir. If assets are more than liabilities.
Then the financial position of the organization is very good.
Good, yes.
If assets are less than the liabilities are more than the assets, then the financial position of the company is not good, bad. Because in the company, more liabilities are there than the assets. So financial position of the company is not good. And third situation is we have two assets and we have two liabilities. We have two assets and two liabilities. That means assets equals to liabilities. Then the financial position is average. How many students will agree with this analysis? How many students will agree?
I don't completely agree, sir, because even the assets are more, we'll have to look into the assets also. Maybe they have bloated up the receivables amount wrongly or something. But in general sense, if the assets are more, it is considered that it's good. But we cannot place our decision 100% on this basis.
Okay. If your assets, if you are preparing a balance sheet and you are showing asset side more, liability side less, then your balance sheet is not agreed, your balance sheet is not tallied, then your financial statements are wrong, right?
Yes.
But every balance sheet must be have both the sides are equal, assets and liabilities. Then that means every business is an average business.
No.
Then the my statements are wrong, which you agreed partially.
No, the thing is that sometimes, I mean, this is practical. I don't know it's workable in the educational side or not. Sometimes we have to bloat the figures to make balance sheet look like big. For example, fake sales and receivables like this, and many other items we can bloat. But I believe when we are good in ratio analysis, we can find out those things also. But in general, in normal circumstances, if the assets are more or good value more than liabilities, then it's considered a normal or good business.
Okay. So I'm expecting the answer at the end of the session today. Okay, how the balance sheet will tally. When as the accountant, your responsibility to match the balance sheet, that's it. Because accounting is having a limitations. Accountant cannot understand. That is the responsibility of the finance manager with the financial subject to understand the financial position. So here in the ratio analysis, we are understanding the profitability, liquidity, solvency, and the business performance. So I will give the answer at the end of the session. Okay. Next important thing is here, ratios is a simple mathematical expression. I'm not telling it's a simple mathematical calculation. I'm telling it's a simple expression. You know, if you are going for a primary school, sad face, happy face, right? These are the expressions we used to learn in the primary schools. Now, when you become a professional, CMA professional, you must know to give the expressions based upon your analysis. Based upon your analysis. So what we are trying to learn here, we are learning the expressions. Oh no, the current ratio is below the ideal ratio. Wow, the current ratio is more than the ideal ratio. Exactly the current ratio, what we calculated is the same as per the ideal ratio. So we have three expressions on every ratio, either good, either bad, either okay. So now you are starting speaking with your financial figures. You know the figures will speak, the balance sheet will tell you, the profit and loss account will tell you, resign the job, go, this company is going to collapse within 2 years. This is what you are trying to understand, forecasting, predictions. Whether forecasting they will do. Here we have to do the forecasting of the future of the company. So here we are trying to understand this company is going to be high near future, or this company is going to be down, or this company is going to be collapsed, or bankruptcy will go on. And it is a number, ratio is a number expressed in terms of another number. It's a number expressed in terms of another number, expressing the quantitative relationship between the two numbers. It's a expression expressing the quantitative relationship, not quality relationship. It's a quantitative relationship between two numbers. Ratio analysis is a technique. It's not a procedure. Ratio analysis is a technique we discussed in the previous class, right? Techniques, concepts, techniques. So, ratio analysis is a technique of interpretation of financial statements with the help of various meaningful ratios. So, ratio analysis is a technique of interpretation of the financial statements. After the ratio analysis chapter, you may give the proper answer based upon the financial position of the company. Ratios do not add to any information that is already available, but they shows the relationship between the two items in more meaningful way. In more meaningful way means ratio analysis will not plus increase the value or decrease the value. No, never. In the ratio analysis chapter, you are not going to plus something, minus something, or increasing the value or decreasing the value. So ratio analysis, ratios do not add any information that is already available. But the ratio analysis will show the relationship between the two items in more meaningful way, like assets equals to liabilities. The meaningful way now we can understand current assets and current liabilities, fixed assets and the long-term liabilities. There are two type of similar words, current assets and the current liabilities. Both are same. Current liabilities 100,000, current assets 100,000. So your working capital is 0. So what does it mean? How we can express our intentions to the management? Yes, we can draft in a meaningful way, very clear meaning, we can say, by using the help of ratio analysis. The ratio analysis help us to draw a certain ratios may be used for comparison in the following ways. Comparison of a firm within its own performance in the past. By using the ratios, we can compare the firm's performance. Mostly, you can check the SAP big ERPs, comparative financial statement, common size financial statements. Means this year, January, for example, if you are a tours and travel company, okay, you must compare last December to this December, last January to this January, based upon the seasonal businesses. If you compare to the Ramzan, especially what happened in the last month of Ramadan, what is our sales? And this year, what is our sales? What is the sales in 2024, 2025, and 2026? So we can compare the performance in the past and comparison of one firm with another firm in the same industry. Comparison of one firm with another firm in the industries. For example, I have an institute, I'm teaching a CMA, and Mr. Iftekhar also started a CMA institute. No, I'm started a CMA, he started a ACCA. My sales are 100,000 and Iftekhar sales are 200,000. Can I compare? No, because CMA have only two parts and ACCA have a multiple subjects, more subjects. So I cannot compare. Because the income, obviously, one student will take the admission for 4 subjects in ACCA. He will pay more. I can't compare. If me and Mr. Iftekhar is open the same institutes, I opened in Dubai, he opened in Pakistan. Can we compare? So me and Iftekhar opened the institutes, both CMA in the same place, in the business base, side by side institutes. I am charging 50,000, Iftekhar charging 100,000. So as a student, where you will join? I am charging only 50,000 fees, but Iftekhar is charging 100,000 fees. I am comparing. Why? Where you will join? Mushraf, where you will join? I am charging 50,000 for CMA. Mr. Iftekhar
Yes,
is
sir.
charging 100,000 for CMA.
I will join you, sir.
He will join me because I am charging very less fees.
No, sir, the quality will also be good, sir.
My percentage of passing is 10 out of 2. But Iftekhar, Passing percentage is very high compared to 10 students. He passed 9. In my institute, only 2. So where you will join?
Iftar third, sir.
Even you don't care paying 50,000 more than me to the Iftikhar because he's having a success rate. That is called a goodwill. Name and fame is having more. Goodwill means an asset which will help you to generate the more profit compared to the normal profit. Both the same
Yes,
students.
sir.
So like this, we can understand how to compare, what areas we need to compare. You are comparing with the CMA with ACCA? No. But we will understand which areas we need to compare and how to compare. Third important point is comparison of one firm with the industry as a whole. Industry as a whole. Multiple companies we can understand for the full industry. Comparison of an achieved performance with the predetermined standards. Achieved performance with the predetermined standards. So I'm expecting a 100% result from this batch. I kept a standard. What is the meaning of standard? Expert opinion is called as a standard. When you will become an expert, when you've done the work already number of times, if you are a perfect, then you are a professional level, then you will become an expert. Expert is nothing but the person who is in a practice, in the continuous practice, then you will become an expert. With the same thing you are doing number of times, you know. First time when you make a tea, first time you are making a tea. Sometimes you put the water more than the milk. First step. The tea is not good. Then you realized second time. So where you added a milk and water equally, but you added a tea powder less. So like this, if you prepare a tea for 10 to 15 times, you will be expert. Many people will see the color of the tea and they will say this tea is not good. How? We have a predetermined mother will prepare the tea. If you want only 1 cup tea, she will prepare exact 1 cup tea. It will not be more or less than the cup. She written something. We're practicing every day. She fixed the standards. If you want to make a 1 cup tea, you can take half cup, more than half cup milk and half cup water and 1 teaspoon sugar and 1 teaspoon or 2 teaspoons of tea powder. So that is predefined standards. She trained you one time. Still, so what is your performance? You make more tea more than the cup or less than the cup? Our taste is good, bad. So like this, we can compare our achieved performance with the predetermined standards. And comparison of one department of a concern with another department of the concern. Same departments are different departments. Performance department, sales department to the profit, purchase department, and the administration department. So here, I'm trying to explain how this chapter will be useful. Clear? Next is advantages of ratio analysis. Here, ratio analysis has the following advantages. Ratio analysis is simple, the understanding of financial statement. Ratio analysis simplifies the understanding of the financial statements. Like we got struck up. Balance sheet must tally. If balance sheet is tallied, the financial position is out there. But now after ratio analysis, it will simplify the understanding of the financial statement. Now we are not in a position to understand what's happening because assets and liabilities are same. That means but the business performance of the company is not the same. So here ratio analysis will simplify the understanding of the financial statements. Ratios brings out the interrelationship among the various financial figures. Very beautiful sentence. Ratio analysis bring out the interrelationship. Assets, any relationship between the sales and the current assets? Mr. Iftikhar?
Sales and the current assets?
Yeah, is there any relationship?
Yes, sir.
Very good.
It's,
Arpita, is there any? Yeah, tell me, sir.
Current, this is account receivables
Yes.
is related to sales, and that's balance sheet item, and sales, of course, they are interrelated.
Is there any relationship between the purchase and sale?
Yes. Because purchases means production and then sales. If we don't have any purchases, that means we are not even producing anything.
Let us understand what are the exact relationship between these things in a meaningful way. Thank you, sir. And figures and bring to lighter their financial significance. Ratio analysis is a device to analyze and interpret the financial health of the enterprise. Like we have a devices for the taking the blood pressure, BP, sugar, right? Same like ratio analysis. If you see Axis in our company, when I issued a flyer with the call health checkup, the financial statement, I got a lot of reviews and comments on that. The person who understood what my flyer sense of flyer, I done that health checkup. Is there any health checkup in the financial accounting? In the financial field, is there any health checkup is there? In military, health checkup is there. In airlines, health checkup is there. Same in the finance also. It is a ratio analysis, a device. Means when device means if you go for a blood pressure, okay, there is a standard is there inside. There is a standard is there inside. What is the standard? What is the standard of the blood pressure, sir? Please help me. Takhar, sir.
It's you mean the normal blood? It's I think 80 and 120.
Yes. So there is a standard is there. Normal 120. If above 120, as per the age, if you are 40 plus 140 is the normal. If it is going more than that, not good. If it is very less than that, also not good. Nearby 120 or 110, 115, okay, but it's gone below 90, then there's a risk. The devices have a standard 120 by 90 is the standard for the blood pressure. Same like in this chapter also you will understand for every financial figure there is a standard. If it is less than that or more than that, you will enjoy the beauty. This is the beauty of this chapter. Princey, are you with me? Princey, are you there? Okay. Rajalakshmi, are you understanding the class? Rajlakshmi,
Yes, sir, I am able to.
helpful, useful the class as the basics?
Yes, sir.
Very good. Who is this iPhone? Who is the student this with the name iPhone?
Yeah, I understand.
May I know the name?
Rajkumar.
Rajkumar.
Yeah.
So next is ratio analysis. It is a device which will help and interpret the financial health of the enterprise. Ratios contributes a significant towards the effective planning and the forecasting. Effective planning and the forecasting, because you know the standard ideal ratios. And a study of trend in the past works as helpful to guide for the future. So ratios contributing to understand the trend in the past, and the trend will help you and guide you to decide your future trend. Future trend. So ratio analysis will contribute the significance towards this. And ratios facilitate interfirm and intra-firm comparison. Ratio signifies interfirm and intra-firm comparisons. They bring out the strength, weakness, and efficiency of a firm and their departments. We are starting, for example, we are starting all the courses like CMA, ACCA, UAE Chartered Accountancy, okay, and CPA. So one student wants to do all. I want to do all. Can he do all? And why these many courses in a different sense? Okay, in the event we explain the comparison to CMA, ACCA, and CPA. Three are the beautiful professions, different professions, how the CMA is different and what is the role. So here, point number 5, advantages. It's helping to understand the strength, weakness, and efficiency of firm and their department. Like as Axis in our company, we knows, the market knows that we are very strong in the implementation of ERPs. Any ERP, if it is a small, if it is a big, any ERP implementation, that is our strength of the company. What is the weakness of our companies? Which we cannot tell, but we know that if you don't know your weakness, you can't stress more on your strength. And the efficiency of the firm and their departments. We have all the departments, Udo, Zoho, all ERP departments we have separately, so we can understand the efficiency of the firm and their departments. Ratio serves an effective control tool. It is a technique, I said. Now I'm telling it is a control tool. What is the objective of the costing? The objective of the costing is cost control and the cost reduction. So ratios serves effectively for the control tools. They also facilitate establishment of a standard costing system and budgetary control system. 2 chapters. Most of the people will teach standard costing first. First, they will start with the chapters called budgetary control. If you understand first the ratio analysis, this is the beauty of the course. We have these 3 chapters. The beauty of our course is we learn the practically in the field with our seniors, in the situations, in the scenarios, when we are working with the different companies. So we understood the ratios chapter has to be discussed first before teaching the standard costing and the budgetary control. Today we are understanding the ratios. Next topic will be the standard costing. Then I will teach the budgetary control in the last. That will make me easy. Standard costing chapter will become easy once you complete the ratio analysis. And sixth point is ratio caters to the particular information need for a particular person. It's not something that everything you will do. Based upon the person's requirement, you can calculate. Someone will ask only profitability ratios. They don't want net worth ratios. They don't want equity coverage ratios. So every department have a different managers. So it is scattered like this. The ratios are scattered like this. One ratio will not interpret your full performance of business. It is the chapter is divided in small formulas, small parts, which will contains one formula will interpret or help to understand the particular area. Depending upon his interest in the business. I don't want to see profit, no. I want to see only how much I invested, how much I am getting ROI, return on investment. I don't care that the company is having more expense, more profit, more. I was interested only in I'm trying to give a loan to the company. I'm trying to give a loan to the company. So I will see the solvency position and insolvency position of the company. I need these two. The profit is more. Okay, my profit is more, but how many liabilities are there? He is in a position to pay current liabilities or not? If he is in a pay, the profit they are showing very good projection. But here we need to understand that the interest, my interest is to understand the solvency or insolvency position of the company. Other person interest is in what is the profitability ratio of this company. One person is saying what is the fixed assets ratio. So I'm investing in the fixed assets. So I will try to understand what is the ratio of the thing. And I must know the ideal ratio of this. Depending upon his interest in the business. So the management can ask you when you are become a finance CMA professional, the management can ask anything. So today we'll try to understand, if time permits, the full areas of the business. And the ratios to be calculated. Which ratios will be calculated? Here a creditor may be interested in a liquidity ratios, while a investor may wants to study the profitability ratios. Like this, every person have a special interest. So as per his interest, we have a ratios. Okay, we can calculate. Just I'm not taking these chapters towards examination to pass the CMA. Okay, these classes I'm trying to give you a basic understanding of what is what and where we need to use, why we are learning these chapters. The responsibility of passing exam will start from 31st May, the first Sunday, the coming week. Though the faculty will make you perfect in how to crack the CMA exam. My classes is called as a orientation classes. In this, my objective to give you an in-depth understanding of the chapters where we will use in our real life. Limitations of the ratio analysis. Limitations of the ratio analysis. So just now we understood, oh wow, ratio analysis is very khatarnak chapter. It will very useful to dominate the full industry by predictions. But it has its own limitations as well. So ratio analysis has the following limitations. The ratios may not prove to be an ideal tool for inter-firm comparison. We are trying to compare. Just now we studied inter and intra-firm comparison is possible. But we are saying this is not ideal, this is not sufficient. Some more techniques, some more tools are there which will complete your interpretation. So ratios may not prove that to be an ideal tool for inter-firm comparison. The two firms may adopt different accounting policies. As Mr. Iftekhar adopted full practical approach of CMA classes, where I adopted theoretical approach. My target is to pass. My students are getting a good rank, but they don't know how to prepare the actual real balance sheet. They know the formulas. The two different approaches of the institutes are too different. Both are giving good results, but the policy Mr. Iftekhar adopted teaching the CMA subject in a practical way. And I adopted teaching the CMA subject in a theoretical way. I'm giving you the number of questions, theoretical questions, examination for practicing, getting the answer, pass. But after pass, what is the future? Many, I can't say anything wrong about the courses, but when you've done the chartered accountancy, many people are not doing the articles. They are clearing their final after CA Inter. They are preparing 3 years final, and in first attempt they passed. But the person who will do the articles for 3 years, bit late he may pass in second attempt. But who will be a good chartered accountant? These courses are defined like the CMA also 2 years. Practical approach is refined. In part of the course, this is a course theme, because the many chartered accountants are coming with a fresh degree. They are working, they started career with the 3,000, 2,000. And the chartered accountant who completed articles, he taken 2 to 3 attempts, means failure in an examination means having a more experience in the subject. We believe like this. The two firms may adopt different accounting policies and the result may not be comparable. Similarly, a change in accounting policy by a firm will make intra-firm comparison meaningless. My company policy is cash sales. Oh, thank you. My company policy is I'm doing only cash sales. I don't entertain any credit sales. But Mr. Iftekhar company is doing both. He is giving credit also. Obviously, his sales are more than my sales. Right or wrong? Rajkumar sir, is right or wrong?
Yeah, it's right. Yeah, it's right.
Because the policies are different. Can I compare? My sales with his sales?
Yeah, there is a cash, and the cash is immediately we can collect it. And credit will take time to get it.
Yes, but his sales are more than my sales. Can I compare both the firms?
Yeah, we can make immediate sales when there is a cash.
No, comparison, performance point
Yeah,
of my sales is 100,000, his sales is 200,000. Can I compare?
yeah.
No, I can't compare
No,
because
sir. No, sir.
his accounting policy is different. My accounting policy is different. I stick with
Yes,
only cash sales.
because there is only credit sales only from your side, and we have both cash and credit.
Yes. So he's taking more risk.
Yeah, correct.
Can I compare both the firms? Performance? No. Because in my company there is no risk.
Yeah, because we
There is
already
no
collected the
risk.
money.
So when you are comparing, you must check the policies of the company. Don't say that this company is doing good and that company is not doing good. And we told all the students in the events how to select an institute. Don't judge yourself based upon the fees. Don't judge the institute based upon the fees. Your basic right to check who is the faculty, how many years of experience faculty. He is only a full-time faculty since morning to night. He is teaching. He don't have any practical exposure. He never went to a real life industry. He don't know. He never worked with the practical accounting, financial statement, balance sheet. He will solve any balance sheet in 2 seconds. This is the question he will solve. But when come to the real life, there is a lot of challenges. Sales team will not give the information. We received the bank statement. We received the 4 checks. But which customer checks we don't know. Checks are cleared, credited to our bank account. But this type of practical issues will come, which will not help to complete our balance sheet on time. But the school teacher will complete the balance sheet within 5 minutes. He will take the trial balance and his balance. A study of ratios is isolation. This word was there very effectively. Isolate yourself during the COVID. What does it mean?
Because to get a good view on that also, or to get better.
Get better. Without studying the actual figures may lead to wrong conclusions. Ratios are only supplementary to and not substitute for absolute figures. Dangerous sentence. Ratios are only supplementary to and not a substitute. Not a substitute for absolute figures. Supplementary exams, annual exams, these words in our life was there. So what we are trying to understand is a limitation. Ratios is a only subsidiary to a absolute figure. It is not a substitute for absolute figure. You will understand these words when you start CMA profession in the real life. So next, ratio can be only as a correct as a data on which you are based. Ratio analysis is the interpretation. If it is right or wrong, you can't say anything. Just you can say this balance sheet is correct, my interpretation is correct. This PNL is correct, my interpretation is correct. This cash flow is correct, my interpretation is correct. If the data is wrong, your interpretation is wrong. Even though you are an expert in ratio analysis chapter, you got a wrong data, you cannot do anything. This is the limitation. If the original data is not reliable, then ratios will be misleading. Miss Princey, are you there? Again, she left. Princey. Hello, Princey. What's happening today with your internet? Yes, what happening, beta? Why are you not jumping, coming, going to the class? Your internet is stable today? Hello? Princey Shah. What's going on? And the fourth limitation is the ratio analysis suffers from lack of consistency. What is the success for CMA? CMA success is depends upon your consistency. Every day you should be in the class, every day timetable, consistency will pass. No consistency, not possible. So here, ratio analysis suffers from lack of consistency. Ratios are defined differently by the various experts and hence are prone to manipulation. So ratios are defined differently by the various experts. And it is lack of consistency. And in the absence of well accepted standards, interpretations, ratios becomes subjective. Ratios becomes subjective where there is no standards in the company. No interpretation. It's only a subject matter. But when we started the classes, we started with a word called ratio analysis is language of business performance. Don't learn this as a subject. You must learn this as a language. In the absence of well standard, coming 2 times. So limitations. Ratios are only a tool for a quantitative analysis. We know that ratios are a quantitative analysis. They fail to take into an account the quantitative aspects of business. Quantitative and the qualitative only 1 letter difference. So ratios are only tools for quantitative analysis. The ratios are failed to take into account the quality aspects of the business. That's why we'll advise all our clients at the end of the year on December 31st, maintain good balance in the company and maintain the good inventory. During the year, only 10 dirham, 20 dirhams in the bank account. But at the end of the year, 100,000, the balance sheet will good, look strong. Can we do like this, Iftikhar sir?
Yes, sir. We often do like this.
What is the
But it's not. But it's only just to show the balance sheet good in the face of the sheet. Otherwise, it's not normal. Most of the entries we do at 31st of December and reverse it on 1st of January just to show that the balance sheet is looking good. But if we talk about the ethics, it's not right.
Can we find out that issue that only you showing the balance at the end of the year? Can we find out?
If somebody wants to find out, it's very easy to find out. For example, if the balance in the bank balance is showing like 3 million, if auditor wants to check or investor wants to check, he will take a bank statement and he will find out that this money is transferred at 28th of December and not whole the year it was there. This is one example, and others also. I mean, if go into the ledgers, we can find out.
Is there any other method, Mr. Rajkumar? Cash flow statement will help.
Yeah, it will help.
So can I give the loan to Iftekhar sir? I am the bank. His balance sheet looks very strong. Can I give the loan?
Mainly with the cash flow, we cannot.
Arpita, can you help me? I'm confused now. Iftekhar sir, he bring 10 millions and he put in his bank account in the last date. Can I invest in his company?
No, sir. The bank is not going to only check the bank statements and all to give us the loan. They will check the various aspects. So when they go into deep analysis, they will know, sir, that it is just to pump up the closing balance of the bank to show it a good value on the balance sheet, and they will know that it is not a reliable financial, and then mostly they will not be going forward with the balance sheet. They don't only check the financial statement, they also take into a lot of aspects. But if we are at the moment talking about the financial, they will not go.
Rajlakshmi. I'm asking because all these all are people are having a very good experience in industry. That's why I'm asking. I'm trying to learn. Iftekhar sir asked me, he's showing his bank account 1 million in his company and he's asking me loan. Can I give Rajlakshmi? As we said, every expert is having different interpretation or different style of ratios, right? So let us understand Rajlakshmi's interpretation of this sentence. Rajlakshmi is there or left? She's there. Okay. Faiz, what you will do? You will give, sir? You will give the loan to the Iftekhar, sir?
So, as per my knowledge, a bank will compare like a few months statement, and if another investor also they will compare with the last 2-3 years balance sheet as well.
Every year he will keep it 31st December big amount. Because he knows how to play with the banks.
Yeah.
Means only
Hi, sir. Sorry, I missed the chance earlier. But yeah, currently, if a bank wants to give any company a loan, it will verify on the basis of the audited financial statements and also the previous, say, 3 years of data of audited financial statements, and then subsequently it will also check on the current in-house management accounts given for the period, and also the subsequent AR for the given period, which will verify on both the ways.
Very good. Just, I want to add one more point here. How we need to answer. We should not say that they will check the audit report, they will check the financial statement. We understand just now what are the uses of ratio analysis. They will check your profitability. They will check your liquidity position. They will check your solvency position. They will check your consistency. That's why they will ask 3 years financial statements. So from now, interpretation of the financial statement, don't say that they will check. Now we are the CMA professional students and we are completing the ratio analysis chapter. So from now, our answer will be yes, they require 3 financial statements, 3 years financial statements to understand the liquidity, solvency, position, profitability, position, business performance analysis. They will do the ratio analysis. In the banks, in the software, they will take your balance sheet. They will put the figures in the financial tools. They have the tools. Ratio analysis is one of the tools, right? Yes or no?
Yes, sir.
So simply they will take your financial statement, they will feed in their tools, and from there they will get a lot of interpretations. They will get a risk analysis, the ideal ratios. In this case, in Mr. Iftikhar case, if he put big cash amount, so the current ratio will be very high. Means current assets are more than the current liabilities. What is the ideal ratio? 2:1. If his current assets are going 4, his current liability is 1, then we'll understand today in the session the problems.
If I am a banker, sir, I'll see wherever is a very positive or big figures are there. For example, bank. There must be a second effect somewhere. I brought this money from somewhere out of the business, right? So it will be showing in proprietor's account or some liability, and that's where we can catch the with the wrong figures or something. For example, bank is showing 2 million. Where is the other effect? If we go into that, then we can find out what is happening with the financial statements.
Exactly. So now, this is your duty now as a management accountant to check the health of the business. So ratio analysis is one technique, one tool for you to interpret the financials, the company. And ratios are based upon the past data. They cannot be reliable guide to the future performance, as the future depends upon the various other factors. So balance sheet is a historical data. Balance sheet is a past data. So by understanding the balance sheet you cannot predict the future performance. That means ratio analysis is not futuristic, right? Ratio analysis will give you the information based upon the past data. Yes, this will help to fix the future standards based upon the previous experience only we will understand. So ratios are valued and can be influenced by a single transaction with the extreme value. This is what I am trying to explain. Single transaction he put, he come and he put into the bank account, whether it will be an investor, loan, or whatever it may be, not a current liability. So current assets are increased. He is not touching a current liability because he want to show strong current assets. Until unless you will not understand, full management subject CMA, you cannot be over smart. This is a slightly a beautiful course. This quality of this person, the person who done the CMA is better than SCC. This is management accounting. Okay. Now, ratios are only indicators. They need a proper analysis by a capable management. See this. You calculated you taken the balance sheet, you applied the formula current ratio, and you calculated the liquidity position. You submitted to the management. The management must be enough capable. Otherwise, they will not understand these things, company will collapse. Even you are ranker of a CM. That's why we always advised all our students to work with a proper, good, capable management. Don't work for the salary. If salary is high, the company management is not good, leave the company. It's too late because as per the age, you need to take a proper steps in the proper age to reach target. No foolish decisions like just I started, I want to survive. I want to survive, I will accept the job. Collapse. In 2 years, 3 years will be lost. Right time will come. So don't change the profession. Having an expertise in vertical is enough to lead your life. Because the stability is required to crack your dream positions. Consistency is required. You are preparing for CMA, you lost your job before the exams. This is what we are seeing our day-to-day life with the students. Many students are ready to enroll. The lack of salary, they're not able to enroll. We understood that present situation, they are struggling to pay 5,000, 6,000 dirhams to our course. But we know that what they can do in the future, they are very much interested. They are serious in the course. We are giving the opportunity to crack CMA. Once CMA is passed, this 5,000, 10,000, 6,000, what they are paying is nothing for them. So I don't want to, I'm not here to stop anyone capable students. So that's why the full fee control is in my hands. I never given a fee control to any other people hand in our institute. To the best of my experience, based upon the scenarios, understanding the situations, we are trying to help each and every student who can at least afford, because here may not only our tuition fees, the other side, the registration, membership, examination fees also in dirhams is a big amount. Okay. So the students who deserve it, and based upon the present situations, we are going to launch one more event which will help the students more. Like in the previous events, we given 40% discount, before 30%, 50% discounts we are giving. Okay, based upon the scenarios, we have the lot of inquiries. Okay, they are giving lot of scenarios, the salary issues, job loss, but we want to find out a genuine students who are enough capable to complete the course. So inshallah, for that purpose, we are planning a strategy how we can help those people who deserve this CMA. They want to become a CMA, but present situations are restricting them to complete the CMA course. So we are there with all the stages with the students. Okay, many people are there, like seniors are there in the classrooms also. They can understand and they can help. Come, as like Mr. Iftikhar has already promised us, if any situation, any student, yes, is ready to help, and then a lot of support will come, not only financial, moral, ethical, professional guidance is required. So in our group, we are adding all the experienced, genuine, good people in the group where they can help in step by step to our students. Okay. Next, the classifications. Ratios are classified into a number of ways. Ratios are classified into number of persons, like good person, bad person, tall person, short person, fat person, thin person, based upon the character, based upon the height, weight, will categorize the people, classify the people. Same like their ratio analysis also classified in a number of ways depending upon the basis of classification. This basis of classifications can be the financial statements from which the figures per computation of ratios are derived from the financial statements. That is called as a traditional classification. In accounting also, we have the traditional rules, golden rules. Debit the receiver, credit the giver. What comes in debit, what goes out credit. Debit all income and expenses. The golden rules, old rules, traditional approach. Now we are following IFRS, modern approach, equation approach. Assets equals to equity plus the liability. Same like ratio analysis, first classification is based upon the financial statements, that is called as a traditional classification. Second one is the test of the functional basis. Functionals of the ratios is called as a functional classification. Functions of the ratios. Third one is importance of the ratios. Classification based upon the functions, classification based upon the importance, classification based upon the point of time in relation to which the ratios are calculated, and the usage of ratios, and the nature of ratios. So there are 6 types of classifications of the ratios are there. First one is the traditional classifications. Second one is the functional classifications. Third one is importance of the ratios, based upon the importance, based upon the point of time, based upon the usage, and based upon the natures. Princey, may I know how many types of classifications are there? From here, we are going to start the problematic area. Okay. So first we need to understand, as we discussed, we must have a separate formula, small notes, and here 6 classification to the best of my knowledge at the basic level I'm giving. Even there is a CMA textbook, they may have the more classifications, more formulas, but we'll see. Are you there? Wise, how many classifications are there? Wise,
Yes, sir.
how many classifications are there? 6 classifications are there. First one,
Yeah.
traditional classification,
Traditional.
functional, importance, point of time, usage, and wastage.
Point of time.
Please tell me, repeat.
Traditional classification and function ratio, importance ratio.
Only we
Point of
can
time.
hear only one Sunday breakfast issue. Have a biryani in breakfast.
No, sir. In breakfast?
Yes, biryani, because his voice is very low. Only one sentence is only one classification is giving and is
Biryani in the breakfast is a perfect formula to sleep.
what he's doing, same thing. Because he's telling only one, second thing is sleeping. That's why I told you to have a biryani. Guys, tell me please 6.
Traditional classification,
Very good.
function of ratio, important ratio, and point of time and relation, and usage of ratio and the natural ratios.
Mushraf,
Yes, sir.
how many type of classifications are there?
6 type of classification is there,
Very
sir.
good. 5th one,
Usage of the ratio,
excellent. So 3rd one,
importance of the ratio.
very good. Raj Lakshmi, can you help me from 5, 6 classifications?
So the first one is the financial statements, that is traditional classification. Then the test of functions, which is the functional classification. Third one is the importance of ratio. Fourth one is the point of time, which is related to the ratios are calculated. And fifth one is the usage of ratios. And sixth one is the nature of ratios.
Very good. Can I jump on to the next slide? Traditional classification means the ratios which are classified based upon the financial figures, financial statements from which the figures are used. The ratios are classified as balance sheet ratios and the profit and loss account ratios and mixed ratios. Traditional classification, these ratios are helping us to understand the balance sheet ratios, which will help to understand, interpret the balance sheet, which will interpret the profit and loss account, and mix means sales to current asset, purchase to current liabilities, expenses to the assets. So today we'll try to understand the full traditional classification ratios. If time permits, we'll jump onto the next classifications. Our chapter will be continued in the next sessions. The ratios are classified as a balance sheet ratios and the profitability ratios and fixed ratios. That is called as a current ratio. We'll discuss is the example of a balance sheet ratio. Current ratio is the example of a balance sheet ratio. Current assets with the current liabilities. Similarly, if both numerator and denominator can be taken from profit and loss account, such ratios are profit and loss account ratios. Gross profit ratio is the example. 2 items you are taking from the balance sheet ratio. Numerator and the denominator, and 2 items you are taking from the profit and loss account, that is profitability ratios. You are taking one from the balance sheet, another from the profit and loss account, that is called as a mixed ratios. Mixed ratios. Mushraf, traditional classification is for
Sir, which one, sir?
traditional
Hello?
classification is 3 types: balance sheet
Yes, sir.
ratios, profit and loss account ratios, and mixed ratios.
Yes, sir.
In the balance sheet ratios, the numerator and denominator both are from balance sheet. If you are comparing the asset by asset, asset by liability or liability by liability, balance sheet ratio. Clear this? Can I jump on to the next slide? Any doubt in this slide?
No, sir.
Okay. Second one is the functional classification. Functional classification means ratios are classified as a liquidity ratios, profitability ratios, and earning ratios. Traditional classifications, balance sheet ratios, profit and loss account ratios, and mixed ratios. Functional classifications, liquidity ratios, profitability ratios, earning ratios. Liquidity ratios will test the liquidity of the business. In other words, they measures the ability of the business to repay its short-term liabilities out of a short-term assets. Liquidity ratios will compare your current liabilities. You can pay off your current liabilities from the current assets or no. Current ratio, quick ratio, stock turnover ratio, credit turnover ratio are example of such ratios. What are the liquidity ratios, Mushraf?
Sir,
Liquidity ratios
Liquid-
are what?
sir,
Tell
to
me.
test the liquidity of the business, in another words, like the quick ratio, stock turnover ratio, creditors turnover ratio. That's the thing, sir. The three type.
First one is the
No.
current ratio. You forgot, no?
Oh, okay.
Current
Yes,
ratio,
sir.
quick ratio, stock turnover ratio, and the creditors turnover ratios are example.
Oh,
Wise.
that's a type only, sir. If it is
No, it
such
will come more.
examples,
No,
maybe.
these are the only examples.
Okay, sir.
These are only the examples.
Okay, sir.
Wise, what are the traditional classification?
So short-term liability and short-term asset.
I'm asking traditional classification. Today you are not with me. You should come face to face. Don't go for online classes. If it is distracting, if you are not able to concentrate due to whatever it will be the reason, the listening should be very clear to answer. My question is traditional classification. We discussed or not?
Yes.
Arpita,
Yes, sir.
traditional classification.
So the examples, what are included in a traditional classification?
Example. Kuch
Yes, sir. Yes, sir. So under the traditional classification, there are three types of ratio. One is balance sheet ratio, another profit and loss ratio, and third is mixed ratios.
Very good. Wise. Functional ratio, functional classification. In the functional classification, liquid ratios.
Liquid ratio and liquidity of business in words measure ability business to repay the short term and out of short term asset. This the example current ratio, quick ratio, stock turnover ratio, and creditor turnover ratio. These are the examples.
Now, can you tell me the traditional classification?
The mixed ratio and balance sheet ratio and profit and loss.
Excellent. Excellent. Good. So next is the profitability ratio indicates the profitability of the business. Examples such as ratios includes the gross profit ratios. And return on capital employed This is called earning ratios. Earning means how much you invested, what is you are getting in the return. Functions, better for the functions. Return on capital employed, etc. Earnings ratio indicates the return to the owners or shareholders of the business. Earning per share, dividend payout ratio, examples of the earning ratio. Iftekhar sir, can you simplify this functional classification in 3 words?
Functional classification is based on the liquidity and profitabilities and earning ratios.
Very
I
good.
mean, if we take examples of liquidity, it's current, quick, stock turnover, and creditor turnover ratios. And from profitability, example is gross profit turnover ratio. Gross profit ratio. And return on capital employed, which means like how much we are earning on the investments or the capital. So earning ratios indicate that return to the owners, shareholders of the business. Earnings per share. Examples are dividend payout ratios and earnings ratios.
You will do in your real life, sir?
Yes,
You use this formula.
these are very yes. These are used in the real life, sir.
Rajkumar sir.
Hello.
Yes, Rajkumar sir. You used in your daily life?
Ratios not used.
Okay. Arpita.
Yes, sir.
You
Sir, we have used the ratios, especially during the year-end profit distribution. That time we have used this ratios.
Profit distribution. How? What you done?
Sir, based on the shareholding percentage of each partners in the company, whatever the ending profits were there after the audited financial statements, from there they have taken the percentages that which based on that they have not distributed the 100% of the profit, but a certain percentage of the profit, and then that percentage of the profit has been distributed shareholder percentage among the partners. So
if
during
the
that time,
distribution of the profit will comes under ratio analysis.
while deciding that how much percentage we should be giving out, that time we have decided, not the full
Is it part-
values,
No,
because
that is that is the calculation a part of accounting or the part of finance.
sir, it is mostly like a part of accounting. It was not fully based on the ratio basis, but no, but certain some calculations were taken.
Okay. Now, third one is based upon the importance. Ratios are classified as a primary ratios and the secondary ratios and the supporting ratios and the supporting ratios. Means supporting ratio, that's why based upon the importance. Primary ratios are more important for the purpose of analysis and interpretation, and the other ratios that support or explain the primary ratios are called as secondary ratios. Primary ratios are very important for the purpose of analysis, for the purpose of interpretation. The other supporting ratios are important for the secondary that will support your primary decisions. For example, return on capital is a primary ratio, while operating profit ratio is a secondary ratio. Operating profit ratio is a secondary ratio. But what I'm trying to understand here, one ratio, denominator or numerator, will take from another result of ratio. One result of ratio will be the denominator, the primary ratio, that is called secondary ratio. Classification on the basis of point of time. Ratios are classified as structural ratios and trend ratios. Structural ratios are calculated from the data relating to some point of time. Some point of time, this year to last year, last year to last year, as they particularly accounting years. The trend ratios are ratios computed from data relating to different period of time. Different period of time. This is called trend ratios. Classification based upon the usage. So here ratios can be classified as a ratio for the usage, ratio to the management use, ratios to the management use, ratios useful to the creditors, or ratios for the shareholders, ratios for the management indicating efficiency of the management. So like this, you need to have your separate, pages, which ratios for the management purpose, which ratios you need to classify from the chapter. So I'm giving the chapter in this style only. So we already done the hard work on that to arranging the ratios based upon the classification. Okay, and same thing you can use. Ratios for the creditors help in ascertaining the short-term and the long-term solvencies of the business undertaking. The current ratio, creditor turnover ratio, debt to equity ratios, and ratios for the shareholders help the shareholders in assessing the fruitfulness of their investments, earning per share, return on capital investments based upon the usage, and classification based upon the nature of the ratios. Here classification ratios are classified into liquidity ratios, means a short-term solvency ratios, leverage ratios, means the capital structure or long-term solvency ratios, turnover ratios, the activity and the performance ratios, the profitability ratios. This is the most widely accepted classification of ratios. This classification has been followed for explaining the computation of the ratio analysis for the various ratios in this book. So we will understand the main classification we are picking up from the nature of ratios. So let us take a 5 minutes break and we will start inshallah the problematic area. We'll give you some, we'll try to solve some of the formulas and we'll try to identify the ideal ratio and we'll try to do the interpretation of that ratio and we'll try to understand what the ratios are saying, what we need to understand and what we need to explain to the management, inshallah, after 5 minutes break. Okay, all of you need break or no?
I'll take a break.
Please. Okay, sir. Thank you. Welcome back. Liquidity or short-term solvency ratios. Liquidity ratio measures the short-term solvency of the firm. The following are the important liquidity ratios. First ratio is current ratio or a working capital, also called as a working capital ratio. Liquidity means the short-term solvency. That means you are in a position to pay your day-to-day liabilities or not. Especially the current liabilities are not. The current ratio is equals to, if the cards are on your back.
Yes, sir. I'm back.
So current meaning of the current ratio is also known as a working capital ratio. And it measures the ability of the business. Ability of the business to pay its short-term liabilities using its short-term assets. So before joining a job, you can check the current ratio of the company. If the current ratio is not good, they are not in a position to pay your salaries. So current ratio, the formula is current assets divided by the current liabilities. Current assets divided by the current liabilities.
Sir, sorry for disturbing you. Can I ask, sir?
Yes, yes.
Sir, after classification of the basis of the national ratio, you went to liquidation or liquidity or short-term solvency ratio. That's the next topic now, sir.
Sorry. See, the classifications we completed up to here theoretical part.
Oh, okay, sir.
Okay.
Oh,
This
okay.
after
The next one is
theoretical,
the liquid.
again, I went back to the first liquidity ratio. This is a problematic area we started now. We'll
Okay,
understand
sir.
the formula and we will solve the
Yes, sir.
question and
Okay.
answers.
Okay. Okay, sir. Thank you, sir.
Okay. The formula is current ratio divided by current liabilities. The current assets are expected to be the assets which can be convertible into cash within the period of 1 year, or can be sold, or can be consumed within a 1 year or a one operating cycle is called as current assets. Examples of the current assets are cash in hand, cash at bank, bills receivable, sundry debtors, stock, work in progress, prepaid expenses, and accrued income are temporary investments. I'll call as examples of some of the examples of current assets. But the current assets means the assets which can be convertible into cash within the period of 1 year is considered as an asset. Current liabilities, the obligations which can be payable within a 1 year. Example, bills payable, sundry creditors, bank overdraft, outstanding expenses, income received in advance. Clear? Any doubt? Ideal ratio, current ratio is 2:1. That means every one liability, there must be 2 assets. 2 current assets. What is the ideal ratio? If you have a 2 dirhams, If you have one liability, 1 dirham liability, if you have, you must have a 2 dirhams of current assets. So if the current ratio is less than 2, if your answer is coming less than 2, it indicates weak liquidity. Weak liquidity. That means business may face difficulties in paying the short-term debts. Working capital may be insufficient. Ideal ratio is 2:1. Once you calculated the current ratio, current asset divided by the current liabilities, if your answer is less than 2, you're wasting the funds. You will face the difficulties in paying the liabilities. If answer is more than 3, that indicates ideal funds. So as we can say, excess cash or inventory funds are not utilized insufficiently. So as we take in the example of Mr. Iftikhar, he kept a 1 million amount in the bank account. If the current ratios are going good, high, that means he is having the excess cash or excess inventory. That means he is not utilizing the funds properly, we can say. So minimum expected ratio, if the business has a bank support or working capital arrangement, the minimum capital acceptable ratio is 1.33:2. To say, if it is 2, less than if you have a bank loan, if you have a working capital management support, the accepted ratio, if it is less than this, nobody will accept. This is a minimum ratio, 1.33:1. That means if you have 1 dirham liability, you must have a 1.33 dirhams of your current assets. So example is, your current assets are, calculate the formula, current assets divided by the current liabilities, right? Current assets are 200,000, current liabilities are 100,000, then the current ratio is 2:1. So we got the answer 2:1. What is the ideal ratio? 2:1. So what the answer will take you? The company has a good short-term financial strength. Good strength, good short-term financial strength. Good short-term financial strength. Clear? Any doubt?
It's clear, sir.
No doubt, sir.
Arpita,
Clear,
Yes.
sir.
Rajlakshmi,
Sir,
Yes,
the
sir. Clear, sir.
minimum
yes, tell me who is having doubt.
suffice.
Yes,
Sir,
sure.
minimum expected ratio 1.33 current
to
asset. That part can you please explain?
Can you calculate this question? 200,000 divided by 3. For an example problem, can you solve? What is your answer?
2:1. That,
2:1. What is your
one-
ideal
one second.
ratio? What is your ideal ratio?
2:1. 2:1.
Okay. If it is less than this, weak liquidity. More than this, ideal funds.
Ideal.
Okay. So exactly 2:1. No. Minimum ratio also 1.3. 1.33:1 also acceptable ratio. Bank will see 2:1 only, they will not see. Okay, it is okay. 1.33:1 also is okay. Minimum expected ratio. What is your doubt, Faiz?
Okay, sir. I got it, sir.
You got it? Okay.
Got it.
Can I jump on to the next question?
Sir, I have also doubt, sir.
Manu.
Sir, this one for the bank support means you're representing for the bank loan, sir.
Yes, we have a loan. For example, our company have a loan.
No, sir. I'm generally asking for the bank loan. It's a ratio. They have the default settings like they will provide, like
Yes.
like
Some
the
banks
scenario,
will,
sir.
yeah, some banks will follow only 2:1 standard.
Okay,
Some banks will accept till 1.33 also.
okay. It's a current scenario. What happening? That's
Different
a
bank to
thing.
bank, brother.
Yes, yes, sir.
Every
Okay,
bank
sir.
have a different policies. This is not
Okay.
standard applicable to everyone.
Okay, sir. Thank you, sir.
Liquid quick ratio or acid test ratio? Quick ratio is the ratio of quick assets and quick liabilities. Current assets, current liabilities, quick assets, quick liabilities. It measures the ability of the business to pay immediate liability using the most liquid assets. Most liquid assets. The formula is quick assets divided by the quick liabilities. Current ratio formula is current assets divided by the current liabilities. Quick ratio formula is quick assets divided by the quick liabilities. The quick assets are assets that can be converted into the quick cash, without much loss. Example, cash in hand, cash at bank, bills receivable, sundry debtors, and short-term loans. What is the difference between the current assets and the quick assets? Quick assets excluding stock and the prepaid expenses. Excluding stock and the prepaid expenses. Stock and the prepaid expenses. Excluding the, what is the difference between the current assets and quick assets, Arpita?
Sir, the quick assets does not include the stock and the prepaid expenses.
Excellent answer. Very good. Quick liabilities are the liabilities that must be paid immediately or within a short period, including bank overdraft. Generally, bank overdraft is a current assets. Clear? Current assets, quick liabilities. So calculation of the quick assets is equals to current assets minus stock and prepaid expenses is the quick assets. Quick liabilities is equals to current liabilities minus bank overdraft. Rajalakshmi, what is the formula for quick ratio?
The quick assets by quick liabilities
Quick assets stands for
divided by quick liabilities.
quick assets means how you will arrive the quick assets.
All current assets excluding stock and inventories and prepaid expenses.
Very good. Quick liabilities,
All current liabilities excluding the bank overdraft facilities.
Rental deposit is a current asset or non-current asset? Iftikhar sir. Deposits,
Rental deposit,
yes.
you're talking about a real estate business where we have rental deposits,
Our office
have
rental deposit.
or we have given the rental deposit.
Yes, we have the company. We've taken the office on lease for 5 years. We're given the deposit.
It's prepaid expenses, sir. Some of them.
No, I'm not talking about the rent, about the deposit for the rent.
Deposits from the tenants.
We have the rent, we have the office, sir. We taken the office on rent. For example, you open the office, new office you take it for your personal office you open, and you taken the office on lease for 5 years.
Yes, sir.
And you given the deposit. Now rental deposit that happen. 5% of the rent or something will give it as a deposit, right?
Security deposits, yes.
Yes. The current asset.
We treat it as a current asset, yes, sir.
Arpita.
So that's a fixed one because it is not repaid until the lease period is over. I mean, it's not returned back to us unless the lease period is over.
Price.
So it's not current.
Okay. Price.
Yes, sir.
Current or non-current?
So non-current because it's not. It won't be turned within 1 year of the cycle, or it's not a short-term period.
Rajkumari, answer. Who given this answer?
So me, Radlakshmi.
Rajlakshmi. Rajkumar. Rajkumar sir. Ashraf Ali.
Sir.
Yeah. Deposit, rental deposit. You done the accounting for your client, right?
Yes, sir.
So where you take it?
Liabilities.
Which liability?
Current liabilities.
Wow.
Sir, non-current liabilities, sir.
Security deposit is given is your liability.
Yes, sir. Yes, sir. But it's a security deposit, but it will comes under liabilities column now.
Not received, given. We given the liability.
Yes, sir. Given. Yes, sir. We're going to receive in the end of the cycling period, sir.
So how it will be a
So-
liability? It's asset, right?
Yes, sir. It's asset, but we will show under the liability, sir, during the financial period. Sir, am I wrong or? Sir, I don't know. When the cycle is over, we are going to
There is a
get
session
a.
number. There is a session number 9 in my YouTube channel. Okay, there are 10 sessions are there. There is a session called Nature of Accounts. Please complete that class before the ratio analysis chapter. Okay, if you not find, I will record and again I will send you the beautiful class that will help you to decide whether it's a capital expenditure revenue or purely a practical. We taken one company example and we define the areas of the departments and we explain nature of account, current assets, current liabilities, fixed assets, fixed liabilities, type of assets, type of liabilities, income, expenditure. This is the problem. The ratio analysis chapter will not be complete if you don't have a basic knowledge. So you need to have your basic accounting chapter, not to feel shy. If you don't know, these are the orientation classes. We'll jump onto the financial accounting classes. Our target is to become a CMA professional, not a matter what you are yesterday. how you will make enough capable to fight a CMA crack. I'm not telling a fight also. I'm telling you to crack a CMA course in first attempt. I'm getting day by day the positive energy. Yesterday, Rajalakshmi started with the sentence when I am talking to her. She given me the positive energy that she want to clear the CMA in first attempt during this year only. This she decided. Anna. So we need to respect her target and ambition, and we are also ready to work hard along with her to reach her goal. That is what we stand for Axis. Anna. So Mushraf, please complete your financial accounting textbook, full textbook, read it,
Yes, sir.
finish it for become
Yes,
first
sir.
year, which will help you to complete
Yes, sir.
because management accounting starts when the financial accounting ends. So
Yes,
if
sir,
you
understand,
know how to prepare a balance sheet from journal entry, ledger, trial balance, P&L, balance sheet, cash flow statements, you must have the hands-on experience. So the people who are the computerized accountant, they don't know the flow of accounting. Please go back to the manual accounting, prepare the journal entry, prepare the ledger posting, prepare the trial balance manually. These ERPs are killing the concepts. No student don't know now double entry system, what entries they are booking. They know how to book the sales in Tally, they know how to book the sales in QuickBooks. This is very dangerous. You will be nowhere after 10 years. You will forget basics. So now more advanced AI came, no problem. If AI came, anyone came, nobody can disturb the accountants who is having a basic, strong foundation entries in your hand. Okay, so please, all my students, if you want more orientation related to the financial accounting, if any 5 students are ready, we are happy to run the orientation for the accounting also.
So what is the answer to our question? What is the treatment of, is it current asset or not?
Okay. So current asset means which can be convertible into cash within the period of 1 year. Right?
Yes.
Yes, sir.
But I given the deposit for 5 years. As per the definition, if we not complete the terms and conditions, it is a fixed asset because it is more than 5 years. But this is not a fixed means not fixed. This is uncertain. I can vacate the property anytime during the year or not. I can cancel my agreement within the period of 1 year. He will refund my money. Yes or no?
Yes.
So now tell me,
So-
it is a current asset or fixed asset?
I still believe it's a
Current assets, sir.
current asset.
Current assets, sir.
Because the nature is not fixed. The agreement is for 5 years, but is not fixed. Arpita, anytime you can exit the contract.
So what if we exit after 1 year then?
That's why this is always a current assets. Anytime it can be terminated. So we are preparing the financial statements for every 12 months. Right? From January 2026 to January. That's why this
Sir.
is assets will continue any number of years. But in every year, anytime we can terminate. Any year, this year we not terminated, but next year we can terminate. Or the landlord can say to go home, vacate the property. He can also say, not only from our side. So there is only condition is 2 months prior notice is required. As per RERA, by giving a 2 months period notice or by paying the 2 months rent, Khalli Wali, take the money, I want to go. So this is not fixed in the nature. The duration is 5 years. And the liability, even you not paid for 5 years. You given post-dated checks for 5 years. This is not prepaid.
It's coming like a deposits under refund deposit, right, sir?
Yes, refundable deposits is that's why this is asset. Anytime
Yeah,
you can get a refund. It's not a fixed. Okay. Like this, many questions are there which will make you confused. This is the only thing CMA can do you. CMA will play with you only these things if you don't have a proper concept. The examples are many. Investment in mutual funds, what it is. So use your weapons, Google, DeepSeek, ChatGPT. No. Try to complete the BCom textbooks, always textbooks of the universities, or refer 2 to 3 authors, khalas. You will get 100% clarity. These PPTs are not prepared only based upon one textbook. Because in some textbook, I didn't get the clarity for the quick liabilities. He given the solution and he given the answer, but he not given the process steps. Only question and the solution. But we believe in steps. Okay. So if you want to calculate the quick ratio, step number 1, first you need to calculate the quick assets. Step number 2, you calculate the quick liabilities. No confusion, very peacefully you need to do these things in the exam. Okay, the quick ratio, acid test ratio, current ratio, also called as a working capital ratio, quick ratio also called as a acid test ratio. Ideal ratio is 1:1. What is the ideal ratio for current assets? 2:1. What is the ideal ratio for quick assets? Quick ratios 1:1. Meaning for every AD1 of quick liability, you must have a 1 AD of quick assets. Where current assets are saying, if you have 1 dirham liability, you must have 2 dirhams of assets. Where quick liabilities, quick ratio is saying 1 liability, 1 asset. Interpretation, quick ratio, if it is less than this, indicates a weak liability. Business may struggle to pay the immediate liabilities. We have the higher, indicates the idle cash or underutilize the funds. Business may not be invest funds efficiently. If you have the idle funds, more quick assets are more assets. That means you are not utilizing the funds properly. You are not doing the investment properly. We can understand. So here always try to maintain, if you are finding any assets, idle ratio is more than 1:1, you can invest the money somewhere. You can invest the money, you can advise your client, sir, your quick ratio is very high. You can invest the money. Why you are keeping the money in? Why you are not utilizing the amount? Like this, you need to engage your client with your expert knowledge and the advisory services. The question is, please take your pen and the paper and the calculator and try to solve the problem. Current assets are 150,000, stock 40, prepaid expenses 10, current liabilities 80, bank overdraft 20. So I given the question just only for the formula to frame. So in the step number 1, I calculating the quick assets. That is 150 is the current assets minus stock minus prepaid is 100,000. Quick liabilities 80 minus 20, bank overdraft 60. Then the quick ratio is equals to 100,000 by 60, the answer is 1.67 means the company has a good immediate liquidity. If it is more, the quick ratio is high, very high. That means they have the good, indicates the idle cash. So immediately they can pay the liability, is not a problem. If it is less than 1, if your current assets are 20,000 and liabilities are 60,000, so negative impact will come. That indicates a weak liquidity. Absolute quick ratio, super quick ratio, current ratio, quick ratio. This is super quick ratio. Absolute quick ratio is the ratio for absolute liquid assets and the current liabilities. Absolute liquid asset, liquid assets. It means it measures the firm's ability to pay current liabilities immediately using the most liquid assets available. It is also known as a super quick ratio, cash ratio, absolute quick ratio. These are the names. Mushraf Ali, Ashraf Ali, Mushraf Ali,
Yes, sir.
Mushraf,
Yes, sir.
Ali, all names belongs to you only. So in the examiner may ask you the cash ratio. Cash ratio, sir not told me. This is not completed. So I done the multiple other examination papers I read. Somewhere I found the cash ratio. Then we try to understand the concept. When we try to interpretation, cash ratio is nothing but the absolute quick ratio or a super quick ratio. Ideal ratio is 0.5:1. Current ratio 2:1. Quick ratio 1:1. Absolute quick ratio is 0.5:1. Absolute quick assets. There are assets that are readily available in cash. Cash, bank, short-term investment and temporary investment. Here, sundry debtors also going out. What is the difference between the quick assets and absolute quick assets or absolute quick ratio? Is debtors also gone out. Current assets minus debtors minus stock minus prepaid expenses. Then formula is quick assets minus sundry debtors. In the exam, they will give you quick assets directly. Here there is no explanation for the formula. Is absolute quick ratio is equals to absolute quick assets divided by the current liabilities. Absolute quick assets are current assets minus stock minus inventory minus accounts receivable or sundry debtors minus prepaid expenses. Interpretation: higher the ratio, strong immediate liquidity, business can pay obligation instantly. Very high ratio indicates idle cards funds will not utilized. Lower the ratio, weak cash position, difficulty in meeting the urgent liabilities also. Not only the short-term liabilities, urgent liabilities also you cannot pay. Means you cannot pay your Deva bill. Question is, please try to answer. Cash in hand, cash at bank,
Sir, can I?
temporary investment, and current assets. So temporary investment, short-term investment is a part of liquid assets. Absolute quick assets. What is the answer? 0.5:1. Once it is the ideal ratio is satisfying, the company has a satisfactory cash liquidity. Ideal ratio, And basic defensive interval ratio, basic defensive interval, all are the liquidity ratios. The basic defensive internal ratio measures how long a business can continue operating using only a quick assets, about depending upon the future revenue, without depending upon the future revenue. Means what is the next month sales? If it is zero sales next month, what will happen? Now the present situations are what's going on. If it is increased, our business will stop next month. So like this, how many months we can survive without revenue? That is called as a basic defensive interval ratio. The basic defensive internal ratio is equals to quick assets divided by projected daily cash requirement. Projected daily cash requirement. Mustafa Ali, you will prepare the sheet, right?
Sir?
Daily expenses sheet.
Yes,
So
sir.
what I am trying to understand with those sheets, I am trying to understand my basic defensive ratio. Quick assets
Yes,
divided by the, what is the formula for quick assets? Current assets minus stock and the
Current.
prepaid expenses. Projected daily requirement means projected cash operating expenses divided by number of working days in a year. Interpretation: higher ratio, better liquidity position, strong financial defense capacity. Lower weekly liquidity, business may face operational difficulties. This ratio tells how many days the business can survive without relying on the next year revenue. So quick assets 300,000. Projected operating expenses are 1.2 million. Working days is 300,000. So projected expenses. So 1.2 million divided by 300 is nothing but per day 4,000 expenses. Basic defensive information is quick assets divided by 4,000 means 75 days. The business can be operated for 70 days, 75 days without additional revenue. Clear? This is very, very important formula in a day-to-day life. Key points for CMA students. Absolute quick ratios focus only on cash type assets, but defensive ratios measures the period of the the survival period of the business. Both are important liquidity ratios used in the financial analysis and audit evaluation. So this is the homework. I given one balance sheet. I given one balance sheet. Sorry for 6 minutes going delay in the classroom. Okay, 1:30. Sorry, what is the class timing? 10 to 1. So still we have time. We can do the problem. Can you please? You require to comment on the liquidity position of the company. Which ratios will calculate? Can you try, please? Can you try, please?
Can you please zoom in little? I
Yes,
have eyesight problem.
it's totally zoomed out. Okay, I will give the answer after the class. I will share you this presentation with you. Okay, step number 1, calculate the current assets. Step number 2, calculate the current liabilities. Because these all ratios, liquid ratios, we understood. Current ratio, quick ratio, super quick ratio, and defensive ratio, all are related to current assets and current liabilities. So from the given balance sheet, First, you have to find out the total current assets and current liabilities. Goodwill, premises, machinery, trade investment, short-term investment, stock, debtors, bills receivable, and other paid expenses. Equity, preference shares, long-term shares, debenture shares. So you must complete BCom second year for the company accounts to understand the sheets. If you are good in your BCom, 50% of CMA is finished. If you are good in your BCom, 50% of CMA is finished. Go back to your university textbooks. Open and prepare. Daily one textbook you can prepare because you are enough matured before the CMA. So step number one, what I have done, because the question is liquidity position. In this question, you can see that I didn't ask you to find out the current ratio, quick ratio, or absolute quick ratio, or super quick ratio, acid test ratio. They not used any word. They said quick position. First, we'll calculate the current ratio, current asset divided by the current liabilities. What is your comment, sir? Current ratio, Iftikhar, sir.
It's more than ideal, sir.
That means it's they are struggling to for the cash flow, or they have the ideal cash flow.
They are struggling to invest the idle cash or idle
No, assets are more. They are wasting the funds.
assets are more. Ideal should be
Not
2 to 1, as we studied.
They are not utilizing the funds properly.
Yes.
They are not struggling. If it is low, they will struggle because assets are less. Two for
Yeah,
assets,
they have,
one liability, two assets.
yes. They have more than ideal. That means their current assets are sitting idle.
So today, again, you need to sit and revise the full PPT, which I will give you after the class. Read it. Not about only these PPTs. You can open a ratio analysis chapter from CMA textbook as well to understand how depth, how long it will go. Rajlakshmi, you are with me, ma?
Yes, sir.
So are you understanding the classes?
Yes, sir.
Yes. I'm teaching well, or you are understanding well?
Both the case.
The tricky question. So
But good answer.
yes, smart answer she given, she balanced. She given me respect, and she also taken respect. Inshallah. So you will be, so she will be a good CMA professional. She will manage all the situations like this. Based upon her answer, how she will manage the company's financials, like how she will manage the company. Not only financial, she has to manage full company, right?
Yes, I believe she will be good in situational things.
Like she will
Because all
balance.
that,
She will happy
yeah.
for both. Is it a good habit or what?
No, it's a balance. It's a good habit, yes. To me, it's a good habit. You need to keep the balance, even if you are telling the, limitations to the management. You have to be you have to choose very good words for that.
Obviously, she's learning the language of the business performance. You are going to such a position. Your decisions. So I have a cases I heard during our classes. One highest degree in India, I can't tell you the because the class is recorded. Highest degree, he got a All India rank. And he joined his company. It's a big company in Saudi Arabia. He given some decisions and the company got huge loss. Not about the loss, many people lives are depends. If you are going for a manufacturing industry, especially the poor labor. Okay. So I believe in straightforwardness, the truth. When you speak with the figures, and these figures will help you to predict the future. So once you predict the future, you can see many cases in India in this RBI governor resigned before that currency situation happened, right? Demonetization happened. And if you go back to the in 2006 or 7, the biggest bank, I can't take the name, when the governor resigned, the bank got liquidated. These big people knows, they will predict, not an intellectual, not sixth sense. They will speak with the figures and they will understand.
In the investments, stock market, like around 2007 happened.
Not the short bank, this is about
Yes, sir.
one bank.
Yes, sir. Like, yes, sir. I don't want to say. It's fine, sir. Sir, I understand.
So that we'll understand. So my advice to Rajalakshmi is these type of situations, you should be very straightforward. No means no, yes means yes. That will give you a proper identity. Once Rajalakshmi said, means said. You should not take back any step back. When you have 100% clarity, if you believe your basics, if you're strong on your reports, calculations, you have the confidence, then same thing you need to replay. So I never advise to balance anyone. Okay, holding the job, you need to balance. To manage the job, you retain the job. If it is, you predicted the company will go last, resign and go. Inform and the management in proper straightforward way. I given one advice to one of our restaurant in 2012 because they modified, we built a balance sheet and we sold that company to the big group. We advised him the way he is continuing on a daily basis because his withdrawals are more than personal expenses, more than the operating expense. I told him if you continue like this, after 3 years, 2 years, you will close your company. So he not listened to me. And after 2 years, he called me. And he not paid my money also because he said, you're talking bullshit. And he comes back to me after 2 years and he asked me, what you said, it's happened now. What is the situation? He paid my money, that money, and he paid me for the future advices also. Because he not paid me, I left the money. I know. I have a confidence that he will come back to me for sure. There now also many students, compromising from the salary point of view, they are going. And we know that they will come back to us. We know the situation, present situation. And we know that many institutes depends upon the commercial areas of this institute. But in our case, we are strong enough in audit. We are strong enough in other areas. So in our institute, there is no liquidity problem. There is no such things will not come. So please, what I'm trying to explain is the big positions where you will go, you should have a habit of very straight forwardness you need to use. I will agree with Iftekhar sir, that should not hurt anyone, but you should express what you want to express without hesitating for a second. You must express what your ratio is saying. You must put your words in front of the management, whether in a positive way, whether it is in a negative way, whether they will accept, will not accept, we don't care. But the degree what we are receiving, we must do the justice with the holding degree, the certificate, because you are reporting to the top level management. Based upon your decision, the low level labor people will go into the big mess. So always, to be honest with your profession, you should not be honest with the company. You should be honest with your profession. So inshallah, you will never be in the trouble. If you try to manage the things until the problem will not come, management will not tell you anything. Once the problem will come, the management will be behind you. I know, sir, I thought, sir, but I didn't explain you, sir, at that time. You may afraid. No. So we are concluding our class today. The learning is the straightforwardness should be there. Straightforwardness means to that extent which you need to explain, you must explain. No hesitation, no balancing, no managing. Otherwise, you are doing an injustice with your designation which you got. Okay. No problem. If you get the job, inshallah, Allah's responsibility to arrange you the next job, it is ready job or whatever it may be, all situation will be favorable if you stick with your profession. Okay. Step number 1, you need to calculate the current assets. Step number 2, you need to calculate the current liability. When you see the liquidity position, when you see the question with the word liquidity, you must calculate current assets. You must calculate current liabilities. You must calculate quick assets. Next, you must calculate quick liabilities. Then you need to calculate quick ratio. Current assets, current liabilities, step number 1. Step number 2, you calculated quick ratio. Step number 3, step number 4, you calculated the quick ratio. Now, what is the interpretation of quick ratio, Arpita? The answer is 1.78.1. What is the ideal ratio of quick ratio?
So the ideal ratio for the quick ratio is 1:1.
No, wrong answer. Faiz,
So ideal ratio is 1:1, right? For quick
Nine.
ratio.
9.
Sir, 1.33:1.
That is
sir.
the minimum. That is the minimum.
So ideal ratio, which categorized did you ask for, sir?
Quick ratio, dear. Quick ratio of the ideal ratio.
Quick ratio.
Faiz,
Yes, sir.
where is Faiz? He left.
Yes, sir. Yes, sir. No.
You went for tea, coffee, or cooking.
No.
I lost the
2
conference.
is to 1.
You will go
Sir,
to
2 is to 1. 2 is to 1 is our ideal ratio.
That is for current ratio. I'm asking for quick ratio.
Sorry.
Raj Lakshmi.
1.5.
So 1.5:1.
Excellent answer. See, quick ratio 2. Sorry, current ratio 2. Quick ratio 1.5. Absolute quick ratio is 1. And defensive ratio is 0.5. Part 5, 0.5% will decrease from ratio to ratio. This is the memory. I remember like this. I don't know. First I know 2, then 1.5, then 1, then 0.5. You will agree with me, Iftekhar? 2, 1.5, 1, 0.5.
Can we go back to the sheet, sir, where we study quick ratio? It's little confused. Maybe memory problem for me.
No. See. Ideal ratio. This is the current
2
ratio.
to what?
Please write down.
Okay. Quick ratio, please.
So quick ratio like 1.1, so that I think that's all.
Yeah,
Quick
here
ratio
we
is
studied 1 to 1.
1 to 1.
So
Okay.
quick ratio, then acid test
Absolute
ratio.
quick ratio 0.5.
Acid test.
0.5 to 1. Hmm.
So where is 1.5? We're not
There is
studying
no 1.5.
1.5. So how to
No.
remember
No, sir.
2, 1, 0.5? Means
Yeah.
double half. First 2. 2 से half हो गया 1. 1 का half है 0.5.
Yes.
Okay.
So it's 1 to 1.
Yes. 1 to 1. So how to
And
remember?
absolute 2, 1.5.
0.5. Immediate half, 50% half.
Yes.
This defensive interval is in days. Okay. Now, what is the answer here? 1.78 is high or low? Quick ratio. High.
It's high. Yes.
Then what is your interpretation?
Still, we can interpret that our some current assets or cash or investments
What is
are
your
sitting
answer? What is
idle.
your comment?
Sitting idle.
Sitting idle.
Comment is it's more than required. Our investments are sitting idle.
Okay. Comment on the liquidity position. Analyze the how we are analyzing. Analyze the if it is a descriptive answer, you want to write like this. Analysis of the current ratio. Ideal ratio is 2.1 and actual ratio is 2.48. So the company has
Healthy liquidity.
yeah, we can say the satisfactory current liquidity position. Analysis of a quick ratio. Ideal quick ratio is 1:1. Actual quick ratio is 1.7. The company is capable to meet the immediate liabilities efficiently. The final conclusion is the liquidity position of the company is good and satisfactory. The company has a sufficient current and the quick assets to meet its short-term obligations comfortably. Arpita, you know now how to draft a notes on accounts, how to speak. Don't say the formulas. Don't show the calculations of the management to the clients. Just say, Khalivali, you will go, if you see the negative current ratio, you can say them. Khalivali, you are going into the problem. Take your salary first. Okay. So this is the, as we know that we believe in bird eye view. We believe in bird eye view. This sheet is the one sheet which will help you for the full revision of today's session. The topics what we covered, we understood the current ratio, working capital ratio, quick ratio, acid test ratio, absolute quick ratio, super quick ratio, and the basic defensive interval ratios. What are the liquid ratios? Liquidity ratios. The liquidity ratios measures the ability of the business to meet its short-term obligations from its current assets. Means it will giving you to understand, interpret that you can pay the current liabilities from the current assets only, no need to sell any fixed assets. So we have the enough current assets to meet the current liabilities. Key formulas, revision, current ratio is equal to current asset divided by the current liabilities, 2:1, quick ratios is equals to quick assets divided by the quick liabilities, 1:1, quick assets is equals to current assets minus stock prepaid expenses, quick liabilities is equals to current liabilities minus the bank overdraft. Absolute quick ratios are absolute liquid assets divided by the current liabilities. Ideal ratio is 0.5:1. Absolute liquid assets is cash in hand plus cash in bank and the short-term investments and the temporary investments as well. So you can do a lot of problems and you can make a list of absolute quick assets. Current assets, you must have a 1 page for current assets, 1 page for current liabilities, and 1 page for this. So try to make a notes when you are solving the problem, different problems will cover the different type of assets. So you need to come back and update your notes. Basic defensive interval ratio is the quick assets divided the projected daily cash requirement, and the ideal ratios and interpretation. Current ratio, ideal ratio is 2.1. If it is less than 2, inadequate liquidity. If less than, greater than 3, and greater than 2 is ideal funds not utilized properly. Quick ratio 1:1. If less than 1, inadequate liquidity. If it is very high, funds not utilized profitably. Absolute 0.5 to 1. If less than this, weak cash flow position. Inadequate is different from the weak cash flow position. If very high, ideal cash not profitable. Basic defensive interval ratio is very high, better. Higher the ratio, better the liquidity position. Lower the number of days of the operation is visible. Important uses helps in judging the short-term solvency business. Useful for creditors, bankers, investors, and the management, and helps in the financial planning and decision making, indicates the financial strength and operational efficiency, important for the auditors, audit and analysis and the comparison purposes. So here, important notes for the students: revise all the formulas regularly. The cost today you need to revise cost sheet formulas and the ratio analysis formulas, learn ideal ratios and their meaning, practical numerical, solve some numerical problems, collect it from the textbooks. Go to, if you need a textbook, I have a textbooks, you can scan and you can complete, or you can make a copy of the textbook and use it. For basic point of view, you have 2 to 3 textbooks, different author, different universities, which will help you to do the different type of problems, understand the interpretation for the better analysis, practice more, score more. So, and the next session, topics will be covered: profitability ratios, solvency ratios, activity or turnover ratios, proprietary ratios, debt to equity ratios, gross profit ratios, net profit ratios, and other important ratios. So thank you very much. See you in the next session. If you have any doubts, any clarifications, you can ask in the group, and make sure that all of you will get an LMS login by Monday. If you people not get Monday evening, please send me a message or send me a message in the group. You are completely authorized to discuss, because the faculty is there, directors are there, founders are there, and all the respective departmental examination department staff is there, admin staff is there, calendar schedule department is there. We have the Alhamdulillah, we have the complete team with us. Okay, respectively, they need to dedicatedly support. Okay, so send the messages in the group. Thank you very much. Have a wonderful day, and you've done the hard work. So we believe in the self-motivation and you invested 3 hours of time, and you are eligible for a biryani to have reward yourself. Okay, thank you. See you in the next class.
Thank you, sir.
Thank you, sir.